Today, we are going to focus on Bitcoin. I know yesterday and the day before is all about Bitcoin. Why? It is the master indicator. The price of Bitcoin will dictate the rest of the markets. But today, we're going to focus on the macro picture, really zooming out and looking at the macro psychology, because everyone that I'm speaking to is getting drawn in to the day-to-day, to the hourly movements of the markets. We want to focus on the macro picture today. So if you like today's content, like, subscribe, hit the bell notification, because I'm here to serve you. And if you don't know me by now, my name is Jagir. I'm the award-winning author of The Extraordinary Venture Capital Opportunity, How to Invest Like a Pro. Been trading currency for over 15 years now, featured in the best-selling book, High Probability Trading Strategies, back in 2008. Normally focusing on currencies, but now I focus on crypto. So let's dive straight in. Now again, looking at the chart, today we're going to focus on the macro picture. So what you see in the bottom left is 2017. On the right, you are seeing today's data. So what I'm going to focus on, let me pull up the whole chart and let's just zoom in over here. So I use Elliott wave and Fibonacci, and if you're unfamiliar with it, take my free Elliott wave Fibonacci masterclass, because it upskills you on the fundamentals, because the markets are driven by fear and greed, psychology of buying and selling. Hey, look, on-chain data, off-chain data, new pools, Dr. Flow, all of that comes into play. But that's really more about the long-term picture on the fundamentals of Bitcoin. But what is the profit-taking psychology? So what I've been talking about more recently, and we called this, right? If you look at my April 19th videos, one of my first ever YouTube videos, this movement to the downside we called that. And now we also called this initial move to the downside with Bitcoin as well. We called that. But what we anticipate is a bigger correction to this zone. So there's a few things that we need to take into account. First of all, we want to be aware of this big correction. This is like the 2018 onwards correction. And wave 2, when wave 2 is complex, and this is like a complex correction, it's very long, very drawn out. When wave 2 is complex, wave 4 is often a simple ABC. So that's what we're basing a lot of this on. So a lot of this, and it's really important to understand, a lot of what we're talking about is really taking the macro picture into account. How did the mass psychology of Bitcoin play out for wave 2, what we're calling a wave 2, and what should we anticipate for a wave 4? So another thing to look at, right, is we've had this clean wave down, right? Initially, we would have anticipated the correction to finish here, but it unfolded differently. So we've got this first leg down, we've got this next leg up, and we should always anticipate 3 waves. It's a bit unusual, this down, up, down, and up. And then I am anticipating a bit more of a further movement to the downside over here to complete this macro picture correction. This correction that we saw down here, this wave 2. Yeah, you remember this? This was 2018, all the way down to 2019, going up until here's 2019 around here, and then the market started to pick back up. This is what we're anticipating here. I mean, comparing it, it's a very different feel, this correction, because there's bigger waves up and down, but Bitcoin is a lot more mature now. Crypto is a lot more mature than 2017, and we need to take that into account. So a few things I wanted to leave you with today is, I want to keep it on the macro, right? Let's just keep it like this. Let's just get rid of these arrows, because everyone's getting drawn into the short-term psychology. We clearly know this is a really key support zone. It was key resistance, and now it's key support. So, the question is Bitcoin going to break below 40,000? Look, no one has a crystal ball. We're in the probability game and not the certainty game. That is so important to understand. So the thing that will firstly negate or invalidate an anticipation to the downside is if the market moves above this point here. That's the major previous swing high. And the one even more important than that is obviously this high over here, which was on September 5th, September 6th, right? If the market moves up like this, then we need to reevaluate. However, what we have, which is very clear, if you look in the top left, if I just make it a larger screen, this is a weekly chart, but I'm just looking at the stochastics RSI. It's been bearish since August 16th, and really got bearish towards the first week of September. And the last, what, 1, 2, 3, and we're into the almost the fourth week of bearishness. So we should probably anticipate at least 2 more weeks of sideways to down for Bitcoin, right? And what we're aiming to do is, I personally don't watch the news. I'm very familiar with what's going on in the world, with crypto, with China, with the US, etc., etc. But it can get very noisy and then very confusing. And what we need is objective, non-emotional information where we can make business decisions, high probability business decisions. So we know the weekly momentum's down. We know that. That's very, very clear. We can now see that the wave 2, what we're calling a wave 2 correction, the 2017 to the end of 2018, end of 2017 to the end of 2018. So it's like a year. So what was the exact dates? It was December 2017. You know, we had that peak, and then it already ended officially around mid-December 2018. So it's like a 1-year correction, a 1-year correction. Now, when the market is this complicated, this is called a complex correction. It's like really drawn out. Again, re-emphasizing, wave 4s tend to be pretty much 3 clean waves, right? And it's unfolded that way. Also keep in mind, again, if you've done any of my courses, you'll know that typical wave 4s actually finish in the previous wave 4 zone, right? Which is this zone here. And I remember when I did my first video on Bitcoin on April 19th, when I called the top, like we can look at it, right? We can look at it when we did a video here and we did another video here, saying we're likely to get a big movement to the downside. People thought I was crazy, right? But we just got objective information, non-emotional information. We're happy being wrong. That's part of the game, part of the business of investing and trading. But it did go down. But it went down as an impulsive wave. Now we've anticipated a next wave up, and we should anticipate another wave down. And I believe the correction will finish over here. So a couple of things I want to just really emphasize before we wrap up is this, what we're calling a wave A. Often a wave C is typically 100%, but this is way too deep, man. I'm not expecting 20,000. It's possible, but I think there's more low probability. What I think is going to be a key number is the 62, 0.618, which is this region, which is more the 33,000 to around the 30,000. But what we want to do is fine tune that. If I now zoom in, I want to fine tune that. If I can just get rid of these now. If I can get rid of this, let's see if I can get rid of this. We want to fine tune that to see if this breaks down into a 5-wave sequence. Now it looks like we've got this initial wave 1, this initial wave 2. I think it's going to break down to a wave 3. We'll probably get some type of wave 4, and then we'll finish off the correction in this kind of zone. Now we don't have enough information yet, but it'll probably coincide with the weekly bullish momentum. And then if we look at the daily momentum, now if we really zoom in on this last part of the market, is more than likely. Again, you hear me use the words likely, probable, typical, common. It's never it will, it never it must, it never it is. It's always probabilities. But we've had this bearish reversal on the blue line is now officially below the red. So just to make that really clear, let's zoom in over here. Look at this. The blue line is below the red and is in the mid region, which is a sign of weakness. If I just pull that back up again, we should anticipate until, this is a really key zone over here, but I think it's going to break. And when it breaks, and if it breaks, it's going to fall quite steep, and this will be like the next level zone. Then we'll see probably a bit more of another correction, and then to finish off the correction. Now there'll probably be a lot of negative news. The bull runs over, it's the bear market, so on and so forth, and that will impact the rest of the market. I'm expecting 0.3 to 0.5 trillion dollars, so like $500 billion to leave the market. So everything will come down, and that is what I'm teaching my students. So if you take my free Elliot Wave and Fibonacci Masterclass, you have an opportunity to buy my courses, and if you do, you'll get entered into my private Telegram. And this is what we're talking about. And I want to do a lot more lives, because what the big opportunity is, if it unfolds this way, it doesn't be in this zone over here. Forget Bitcoin for a second, but we're using it as an indicator. There's going to be a lot of buying opportunity. When there's a lot of buying opportunity, that's where you can make a lot of profit. So if you like today's video, like, subscribe, hit the bell notification. I do really appreciate your support. Let's finish on a quote. I'm just going to keep it to my book, right? I'm just going to keep it really, really simple. In fact, I know the quote that I want. I know the quote that I want to read. I can't remember what chapter it is yet. In fact, I'm going to read two quotes today because it's really, really pressing, really, really important. First one is chapter 2, which is rule number 1 when it comes to investing: never lose money. Rule number 2 is never forget rule number 1. So that's all we're really talking about is risk management, right? Right now, it's such an uncertain time. We just want to be very, very careful. I'm more in defense mode right now, right? And getting ready for attack mode. All right. And I want to read one more. I can't remember what chapter it was. I'm just flicking through. Here we go. It's this one here. Simplicity is the ultimate sophistication. In fact, let me pull my face back on. I'm using this new software. I would love to get your feedback. Using this new software where I can kind of flick through it. But here we go. Simplicity is the ultimate sophistication. That's Leonardo da Vinci. Now, the problem that I found with a lot of YouTubers, I got a lot of respect for them, especially when it comes to fundamentals. But a lot of people are lacking the skill and the experience when it comes to technicals and the psychology of the markets. And everyone's taking too much information into account. On-chain data, orders, wallets, number of wallets open, new pool, stock to flow, number of projects opening, and there's probably another 50 metrics, what the US is saying, what China is saying. It's very complex, and often you're going to see one thing saying bullish and the other thing saying, bearish. And that's just very, very confusing. You need a system that's easy, scalable, predictable, you can replicate, and it's non-emotional, very mechanical. So what I personally use is Elliott wave and Fibonacci. I found it incredibly useful. In fact, let me show you something. Let me show you this. Let me show you my screen again. I'm going to show you this. I'm going to finish on this. I promise. I promise. I want to open up a chart. I want to open up Solana, right? Solana. Let me open up Solana. Now, you may have seen my video on Solana, and if you haven't, it's really important that you do. Why? Because using pure technicals, ignoring the news. If you look back at my video, I think it was 3-4 months ago. In fact, let me pull up the video. Give me 2 seconds. Let me pull up the video, right? Let me just grab it from here. Give me 2 seconds. I've got multiple browsers open at the moment. I'm just going to get my channel up. I'm just going to copy it over to the other browser. Here we go. I think this is important because I love being objective, right? And by the way, I want bullish behavior of Bitcoin. It's good for the markets. It's great for the markets. But what I want to just scroll down to, we did the Solana video a month ago, but then we did one around 3 months ago. And I think it's important for you to see this because this is more just showing you, nothing to do with me, because I've just been doing this. It's Elliott wave and Fibonacci. So this video was on the 14th of June. And what we said was we're expecting this correction to finish, 3 waves to the downside, the end of wave 2. And after wave 2, well, what's the next number? Is a wave 3, and we expect higher highs to be made. And this was on June 14th. So if we jump into Solana, it unfolded almost just textbook, right? Textbook. It just unfolded. Let me just change the view over here. Give me 2 seconds. So you can see my. There you go. There you go. Yeah, you can see it unfolded just textbook style, which is what we called. We said, look, this is when we did the video. We should expect a wave 2. And look what happened. Like a wave 2 formed almost perfectly, right? We said we should expect a wave 2, and it just formed perfectly. And it was pure Elliott wave and Fibonacci. Elliott wave meaning reading the psychology of the markets. They tend to unfold in typical predictable patterns around 50 to 60% of the time, so not always. So when there's a clear pattern, we want to leverage that information. And then Fibonacci allows us to measure previous waves, and there's a relationship from that wave to the next wave, which allows us to predict with high probability of what's likely to occur. And we had this zone, and look, we just pegged it. It hit this low, and then I did another video. And I want to emphasize this because I think it's important for you to know, because it's so much confusing information. So I said, Solana, this was around 3 months ago, preparing for takeoff. So this was like a follow-up video. Or was this the same video? Was that the same video? Let me just double check. So that was that video. And then there was a follow-up video more recently. I think it was this one. Let me just find it. Let's have a look. I've done so many videos now. I think we must be getting close to 200 videos since April. So I hope you've been finding them very, very useful. Here we go. So this was a month ago. Solana to 400% return. You know, I spoke about Elliott waves. So here's the theory side. You know, in the video I covered the theory side, and then if I just fast forward, what I'm saying in the video, if I get towards here, is we've got this wave 2 low. The market's moved up more than it's previously moved up. So we now should be anticipating a wave 3. And in advance, leading indicators, we drew two very clear price targets. The first one is this green line over here, which is called a 1.618 price extension of $112.49. And then the next price target of $167, right? So it's quite broad, but we said as the market unfolds, we can kind of see what's happening. So now if we just go back to Solana, right? What happened? Well, let's just actually do this first, right? Before we unfold the data. Here's the price targets, right? This is what we drew in advance. In advance. Look, here's the video. Go back and check it, right? And I'm emphasizing this more because we always want to go with objective probabilities, right? It doesn't mean it's going to happen. It just means it's highly probable. So now what happened? In fact, let's do it this way. Let me take the data back to this point. So this way we can just do it like this. This is what the market looked like, right? When we did the video. This is that video, roughly this date, right? And then what happened? Look what happened. Look what happened, right? It went up much faster than anticipated. I'll give you that, right? It was associated with some news announcements as well. But look, smashed all the way up to this 167, slightly more overextended. It's a nice 1, 2, 3, 4, 5 structure. And now it's doing a bit more of a correction. So what do we anticipate next for Solana, right? Now today's focus is not on for Solana, but now if I just update this video or this chart, is let's just delete all of this stuff, right? Let's just delete all of this stuff. And now we look at the macro. Well, we got this nice wave 1. If I put it up here, if I can get this right, boom, here we go. We got this nice wave 1. We got this wave 2. Let me just delete this stuff here. Let's just keep it nice and clean. I like to keep my charts very clean, right? Let's get rid of this arrow, right? Let's even get rid of the indicator, right? So with Solana, we've got this wave 1, 2, and when it was around $24 or below, we were saying we should anticipate a wave 3, and then we did a follow-up to say, all right, it's looking like the wave 3 is beginning. We set the price targets and it went up. Well, a wave 4, let me show you what a typical wave 4 looks like, right? A wave 4 typically corrects. If we measure wave 3, there's a few other things that you would need to do, but this is like just the basics. I covered this in the free masterclass of Elliot wave and Fibonacci. I really highly recommend it. I've put in a lot of work to try and simplify this very complex, scary, and emotional space called investing, let alone crypto, because crypto is more volatile. So these are the typical wave 4 ranges, and the absolute maximum, I say absolute, typical maximum is 62%, but most common is you'll find wave 4 corrections, which is a profit taking wave. Imagine people that have made profit on this. Yeah, forget the utility of Solana for a second. The underlying token has made an amazing profit, especially when people bought down here, right? Rolled this up, boom, and rolled this up. If people bought down here, the price was like $2 and getting to $200, that's 100x. So obviously people are going to take profits. So wave 4 is a profit taking wave, but we should always anticipate 3 waves. But these are the typical zones. We've hit the first zone of 38.2%, but the correction in comparison to this one, it hasn't really unfolded yet. So I would say this is the first leg down. We should anticipate a correction to the correction, something like this. And then we'll get more than likely, again, probably another correction down before we get a continuation for a wave 5, right? So Solana's train has left the station. I think it's going to be quite bullish later on this year. But right now we want to look at other projects. And a typical Elliott wave rule is that wave 4 should not trade into the range of wave 1. So this, we can be very confident that is very highly probable that the price will not go below $55 and it will be around this range. But as the market unfolds, we'll get more information. So why I'm showing you this is when we're looking at Bitcoin, I've read your comments, and sometimes it's amusing because, but I understand it. I absolutely understand it because very few people are looking at the macro, like the real macro picture. What is happening? What's the psychology of this game that we're playing called Bitcoin? So, yeah, I just wanted to make sure that this is very, very clear to you because most people are going to lose. The game of investing, not only in crypto and all markets, is a zero-sum game when people are buying and selling Bitcoin. People are betting against each other, which means for people to profit, others have to lose, and for people to lose, others have to profit. It's a zero-sum game. So you want to get the edge in your favor. So if you like today's content, like, subscribe, hit the bell notification, take the free Elliot wave and Fibonacci course. I put in so much work. It is a complex topic, but I've done my absolute best to simplify it so you can get the core message. The 20%, that will give you 80% of the value. The 80-20 rule? Boom. So take care. We're on defense mode right now, and I'll see you soon.